Good evening to all the viewers who joined in so far from today's webinar from the Sambhashane Karikrama. We have a very interesting topic and a very interesting person, Mr. Ashok Karani, who is a global lead expert in GE. He's working in GE healthcare industries, and he is son of our retired senior officer, Mr. Karani, who served in our department and illustrious care. And around, I think, in the 80s, late 80s, he retired from our department. So today's topic is everybody is going to appreciate. It is on wealth management. A brief introduction about our guest of honor, Mr. Ashok Karani. He did his BE Computer Science from MS Ramaya and passed out in the year 1992, Computer Science with high distinction, and he joined electronic firms, and later on he moved to US also. He was in the US for 4 or 5 years, that's what I understand, and then he has joined GE Healthcare, and he is leading 4 different regions: India, France, China, and US, I think US also. So he's got around a 200 strong team who was reporting to him. And he's a domain expert. I need not say, because now that there's nothing you can do without a computer. Even a small task, you need a computer. And electronics development, it all started with the discovery of electron last century, and within 100 years we find that one small discovery has led to this beautiful electronics, which is branched out into so many things. And nowadays everywhere you go, they talk about AI and robotics and whatnot. So things are moving at jet speed. Technology is also moving at yesterday's technology is outdated today. That is the speed with which it's going. For any country, if you remember, Indian economy opened in 1991. And ever since Indian economy opened, we have a lot of global players in our Indian market, which has become an integral part. And there is always a demand for talented young people, engineers who are going to develop the algorithms, the software, everything. And naturally, wealth development of an individual, a home, a state, or a country also, it goes hand in hand. As you see now, our government of India is planning to make $5 trillion as the target in the next couple of years, economic growth. So India is now third in the world economic field. So wealth development at individual level will lead to the society and also the country. So this topic is one of very great, interesting topic, and Ashok Karani sir is going to share his thoughts and also educate us on some finer aspects of this field. So I extend a warm welcome to Mr. Ashok Karani sir, to talk on this topic. And today our President Narayan sir might join a little late. He's busy otherwise. So
yes, come now.
I am here, Vasu. I have joined.
Sir, warm
Thank
good evening,
you.
sir. Good evening, sir.
Thank you. Good evening to Mr. Ashok Karani.
Yeah, thank you, sir.
Thank you.
So welcome, sir. Welcome, sir. So
thank you.
Sir would like to talk something, and then we can formally.
No, I good evening to all the participants and Mr. Ashok Karani for accepting our request and addressing us today. As you rightly said, wealth development is the key.
Yes.
In fact, nowadays there is a huge trend change, unlike 20, 30 years back.
Yes, sir.
Entrepreneurial thing has increased. People want to generate employment, set up companies and things like that. Except we bureaucrats, our mindset is totally different.
But in due course, I think it also will emerge, sir, because
yeah. So I must appreciate Kodandaram, Vasu, Kaushik. All of you have been carrying it forward with. Sometime last week I could not join.
It's all accepted.
So, but you have been taking it forward, and thanks a lot. Thank you, Mr. Ashok, and we are eagerly waiting to listen to you.
No problem.
So the stage is yours, sir. Welcome, sir. Please take over.
So
Yes.
thanks everyone for inviting me here. It's a great honor and privilege for me to come and address the esteemed people here in this meeting. So also I'm very glad that I'm able to talk to many of my father's colleagues here in this group. So thanks very much for the invite. So let me share my screen. So let me know if you are able to see my screen.
Yes, sir.
Yes, visible. Yeah.
Yeah.
Visible. Please
Great.
go ahead.
So today's topic, as explained earlier, is about wealth management. So wealth is something that we all create, right? In our life, we work very hard, and then we create money as part of as a side product of all our work that we do in our entire life, and then we generate some resources and some money. But the most important thing is how do we manage this, and then how we grow it. Okay, so I think that is the most important aspect. While a lot of people work very hard in their entire career and life, management is what they miss, right? So it gets lost through some unknown ways. But this topic today will be to just how to we have x resources or x amount. How do we manage that? So this is the topic of today's discussion. So the agenda will be like how do we make money in the entire world of people. The most important question is how do we make money, right? So there are certain standard techniques and certain ways of making money. So I'll just briefly explain that. Then what are the money basics? So once we have the money, what does money mean to all of us, right? So that's some basics. Again, these are all my individual thoughts based on my reading and based on my experiences in life. So people may have different opinions. It is absolutely fine, but this is just a way of some of the things that I've learned through my career. Then very important, we should know where we stand. Okay, so what is our financial worth? Okay, so whatever we have earned in our entire career, if you add it up, what does it mean? Then how do we do our expense planning? Then going forward, what are some basics in investment? So now we have earned a lot of things, but then how do we invest it, right? So some basics in the investment models that people follow across the world, right? So again, this is the standard, not just in India, but across the world. When people want to invest their money, what all do they look for? So that's what I call it as basics. Then the standard investment techniques of real estate, where do you invest in real estate? What is the return on real estate? How do you invest in a stock market? How do you invest in a mutual fund? What is the returns that you can expect from these investments? And what are the risks, obviously? And then at the end of the day, there are multiple ways to invest your money, but then how much do you allocate to each of them? So that's also extremely important. So sometimes we put all our money in one basket, and then if that goes for a toss, then we are all back to square one, right? So how do we do our asset allocation? So this is the broad level agenda. I request as I am speaking, if anybody has any question, please do speak up and ask the questions. You don't have to wait till the end. Since I am presenting, I will not be able to see who is asking question or if somebody is putting a question in the chat. I would request the moderator, Mr. Vasudev sir or Mr. Kodandram sir, to just stop me if I am not able to see those chat questions or if somebody is asking this one.
Yes,
Okay?
yes. Yes.
Sure. So, moving to the ways of making money. Okay. Across the world, okay, there are 4 different ways that people make money. And what is that, right? So, first thing is an employee. Okay. So, we all, including me, I work in a company. Most of the attendees here in this call are government, central government employees. You're also employees. People go to factories to do some work, whatever, right? So, we are all employees. We offer our skills. What is the meaning of an employee? We offer certain skills to the organization, and the organization pays us a salary, right? That's the meaning of an employee. They hire us based on our skills, and for the services that we provide to the company, or to the government, they pay us a monthly salary or whatever, right? So that is what we define as an employee, okay? Or a job, a person who has a job. And we get salary, that is how we make money. Then there are some self-employed people. Okay, what is meaning of self-employed? There's a, let's say there's a doctor, right? He opens a small clinic on the main road. He's self-employed. There is a lawyer who has completed his LLB. He opens up a law this one. And then there could be a small darshini kind of a hotel, or there could be some small shops that are there, a cloth shop or whatever. These are all self-employed people. Okay, so they also make money. That is why we call them self-employed. But what is the difference? Okay, what is the difference between an employee and a self-employed? So we all also need to understand this one, right? Let's say there is a doctor who opened a small clinic and he is doing good business. Let's say he falls sick, the doctor falls sick for about a week. Do you think the clinic will run without the doctor? The clinic will close because the whole clinic is running because of the doctor. Let's say there's a small darshini which husband and wife are running, and let's say some of them fall sick, they will close the shop for a week, right? So a self-employed means it is running purely based on a person's individual effort or a talent. Okay, some other doctor cannot run the show, or some other person cannot come and run the small business. So a self-employed has its own positives and negatives, whereas if you are an employee, if you fall sick, you put leave and then you still get your salary. Okay, so these are some of the pros and cons. Then there are business. So people run business in the general context. Business means where you employ maybe 25 or 50 people more. Okay, and in that business, let's say the owner of the business goes for a vacation for 15 days or falls sick or whatever, the business will still run, right? If there's a big hotel that is running, if there's a big factory that is there, he has like 50 or 100 employees in that factory. Let's say the owner of the factory goes for a foreign trip. He will not close the factory and go, right? The business will run on its own. He would have hired a certain to run the show. So that's business. So a business owner also makes a lot of money. Then the last segment is called the investor. Okay. So this is the very interesting aspect. The whole topic of today's discussion is how can you become an investor? Okay. That is we all, wherever we make money, right? What do you do with that money? We all want to invest. So an employee earns salary, but apart from his expenses, there is a saving and they want to invest somewhere. A self-employed person also makes money, savings they want to invest. A businessman also makes money. The savings is what they want to invest. So at the end of the day, as you can see the arrow, typically all money goes into an investment. Okay. And why is that? Right? So the simple reason is in life, there are two kinds of income. So one is the active income and then one is the passive income. Again, in all our strategies of money making and investment, all our mindset should be that we should try to generate passive income as much as possible. So as early as you get that mindset, your financial strength of you as a person will keep increasing. Okay, so just to take my personal journey, this is Rich Dad Poor Dad. There's a book called Rich Dad Poor Dad written by Robert T. Kiyosaki. I read this book at the age of 30. Okay, when I was now I'm 55, so I read this book 25 years back. I keep reading a lot of books related to finance, investments, and those kind of things. At the age of 30, I got a clear indication that I need to start investing my savings to generate passive income. Okay, and it has helped me a lot in my entire career. It has helped me a lot. So I'll tell you how to generate this passive income. See, active income is your salary, right? You get your salary, or if you are a self-employed, you every day you see a few patients, a doctor gets some money. That is active income. But the moment you stop working, your active income stops. See, today I am working in a private company. If the company removes me from the job or I decide to leave from the job, I have no salary. So my active income stops. But then how do I run my family? I need passive income. So from the beginning, all of us as a wealth generator, we should always think of how do I generate passive income? So that is the fundamental. So in all my slides, I will have this punchline. Okay, this is called the punchline. This is most important. Transition to investor. Okay, all of us, whether we are employed, business people, self-employed people, we all should go into this zone, because in this zone we start making passive income. Okay, which means we don't work, money works for you, right? That's, if you see this statement, money works for you, and whereas in all the three quadrants here, you are working for money. Okay, so that's the thing. So any questions on this topic?
I think it is quite clear. The way you explained it, even
Okay.
any layman can understand. Because
Okay.
we hardly know any finances, but your ESBI formula has
Yeah.
kept us. We have to keep a big eye on the eye.
Exactly. Thank you, sir.
It's a truly a beautiful concept. You should have given this webinar 10, 20 years back.
What to do, sir? So no problem. I think we all learn
No, and see, we also do it, but we are not doing it in that kind of a
structured.
professional. Mostly,
Yeah.
you invest in sites and things like that.
Sure, sir.
Anyhow, it's more of a consciousness.
Yeah,
Okay,
definitely.
thank you. Please go ahead.
So money basics, right? See, at the end of the day, we make money, and it's good to talk about money. So that's the first thing that I want to tell all of the audiences here, right? See, people think, oh, to talk about money, it is as if I'm doing some major sin. I should not talk of money. See, all that is spiritual. So leave all that spiritual talk aside. Money is important in life. Okay, now let's all understand that some people may have different opinion, but those who are attending this topic probably also feel that money is important in life. It will give us good lifestyle. It will give us good health. It will make our life smoother without any tension. I would rather live in a good RCC house rather than staying in a small hut. If I say I don't want money, oh, I don't like money, whatever, we will stay in a small hut. When it rains, we all will get wet. Rather, I would rather stay in a good RCC based house. That's what money can give you, right? The difference between a hut and a house is you are more safer, you are protected against nature, you are protected. So like that, I'm just giving you one example why money is required. It is absolutely essential in life. It will give us very comfortable life. So it is good to have money. It's good to talk about money. There's absolutely no sin involved in that. Okay. Then comes the next question. Okay, we all make money. How much money? Okay, how much money? Right? So there is no limit to how much money we can make, and there's no limit. As we get more money, we become greedy, and then we can continue to move on in life. Okay, so how much money? The punch word is there. You just read it for now. I will explain what that number, what that enough means, right? Then again, there are types of, yes, I want to make money. We all want to make money, but do you want to go the legal way or do you want to go the illegal way, right? The thumb rule is like this. When you do something to make money, will you get sleep that night? Okay, if you get good sleep that night, then it means whatever money you're making it in a legal way. If you don't get sleep that night, then you have made some illegal activities. Okay, that's at least my punchline. So always good to make money in a legal way. There are many ways to make it, but always let's go through the legal one. Obviously, this audience is not about illegal, but I'm just giving you, there are people who do make money through the illegal way that will have its own consequences. Okay. So coming to the most important point of this slide, it's all a mind. Money is a mind game. Okay. It's a very, very simple mind game. Are you satisfied or are you not satisfied? Is there any benchmark? There is no benchmark. You yourself or your benchmark in your mind. If you feel you're satisfied, then you're satisfied. If you feel, oh, I'm not satisfied. I have one car, but I needed another bigger car. I have one house, but I need another bigger house, blah, 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 whatever is a state of mind. So there is this concept called enough. It's a well-researched topic. We all need to know what is our enough state for money. Okay. I'll just throw a number for a decent middle class, upper middle class family. Okay, there is a number called 8 crores. Okay, that is what is called enough money. Okay. Once you have this number, this much X money, you can lead a very comfortable, sustained life, provided you have invested that money in the right ways. Okay. You can really relax, quit your job, and then lead a very comfortable life. Okay. And this number can change from one person to the other. If you ask a person doing some labor work or a coolie work, he will tell, boss, if I have 10,000 rupees, I'll be the Raja of this entire world, because he can do whatever with that 10,000. But whereas if you ask somebody else, the change, it is change. So enough is a state of mind. So the suggestion in this discussion is, you decide what is that enough money. You have to work very hard. You have to work very hard until you reach that enough state of your mind where you have calculated a number. Beyond that, the thing is, stop working. No. Please continue to do your good work, do whatever you need, but you don't have to work for money. Okay. Until then, you have to work, because if you need a house, you need to work for money, you need to save money, do whatever. Once you have reached that enough state, that number, you decide what that number is, then you continue to work, but that is more as a pleasure, right? You work more for pleasure. It's not that you've taken care of your basics, everything is done. So that is what is the enough number. Of course, greed, you all know, the more the greed you have, spoil. This is where, if you see some of the politicians, or how much ever they have, they are not satisfied. It is pure greed. Okay, so that's the difference between enough and greed. Any questions on this slide?
Go ahead, sir.
Yeah. Okay. So now, how do we start this whole journey? So you start your journey by knowing what is our own worth. Each of us need to, because when you start, you should know, if you know today what you are, maybe 5 years down the line, what you want to become. See, whatever is in the past is past. Now, nobody can go back and say, oh, I should have done this, I should have done that. That is all done deal. We all start from today. Today, what is my worth? Where do I stand? Again, no comparison. Please don't compare one person to your neighbor, to your friend, or whatever. It is individual, right? God has given us some gift. We have all worked hard in our life. There is X amount of money we have made. What is that money? Do we know our worth? Okay, we start from here. Then we build a goal, right? We build a 5-year goal, a 10-year goal. Where do we want to go? Okay, and the goal may vary from one person to the other. But many people, the first thing I ask is, boss, do you know your worth? The moment you know your worth, your approach in life changes. So it's very, very important. You are the most important person in your life. You should know where you stand from a financial stand. Because this discussion is only on finance, I'm talking of financial worth. There is the emotional worth, there is a friendship worth, there is so many other things that are there. But today I'm only asking for financial worth. Okay. Simple. You can, as simple as that. Say, I track it in an Excel sheet. From last 15-20 years, I am tracking my worth in an Excel sheet. People can do it in a simple book, right? Just write down what all assets you have. Very simple. You might have one site. You might have, so what is the value of that site? Maybe 50 lakhs. You may have a house, worth of that is 1 crore. You may have a car, maybe 10 lakhs. You may have FD, 20 lakhs. You might have bought some mutual fund, 20 lakhs, whatever it is, right? Or you might have some gold in the form of physical gold, which is there with the ladies in the family. Add all of that, right? Make a list of all the gold that you have. That is the asset tracker. Okay, as simple as that. Just make a list. A lot of people miss making that list. Okay, it is a very important list in your life, and you should. And in my case, I update it every 6 months. It is up to the individuals. You can update it 6 months. You can update it on an annual basis. However, because the worth of that changes, right? What do you do when you say update? You have a site which is worth 50 lakhs today. Maybe 1 year down the line, 50 lakhs may have become 55 lakhs, right? The price of the real estate may increase. So you have to update that. So now you know, from 50 lakhs to 55 lakhs, it increased by 10%. Okay. Any property that increases by 10% is a good investment. Okay. So that is the kind of mathematics that you will have to do. It is very simple. You all are very educated and working in GST, so I don't have to teach you mathematics. You all are good in that. So that is the purpose of it. First thing is, you know everything. Okay, what you have. Then when you update it on a yearly basis or a 6-month basis, you know how much it grew. So you clearly can articulate which is a good investment, which is not a good investment. Okay, anything which is growing well is a good investment, which is not growing from a percentage standpoint is probably a slow growth investment. Okay, you will have a map. What action you need to take is up to you, but then at least you know where do you stand. There are many websites available. You can just use those websites. Every bank, HDFC Bank, ICR, Asset Tracker is the name itself will be Asset Tracker. You can track the Asset Tracker either in their online websites or you can just do it in a simple book if you're not comfortable with any of those things. Then the most important thing is discuss with family. See, when you make this list, see, it is very important. Again, these are all my personal opinions. I would leave it to you. Some people don't discuss finance with the family, children, spouses, whatever, right? Don't discuss with a stranger, but your own children, your spouse, please discuss all your finances. You tell, I'm going to invest here, I have a property here, I have this much in FD deposit, I have this much in my PPF. So educate them. See, the more the family is financially educated, it is that much good. Okay, so please discuss with your family, educate them, bring them on the same page. And there are multiple benefits because of that. They will learn finance management at a very young age. They will take care of their own finances. So a lot of benefits are there. So the summary of this is know your financial worth today, okay, which will help you to plan in the future. Okay, next is expense planning. I think this is very simple. You folks are very senior people here, so I do not want to spend too much time on this, right? So ideally, you should know what are the expenses you will get in the next 5 to 10 years, right? Then what is like probably there is probably a marriage in the family, or there is you're going to construct a house, any health related issues of parents, whatever, you'll have to spend some money there. Obviously we all take health insurance, life insurance, vehicle insurance, then there's education of children, blah blah blah. All these things discuss with family, with friends, okay, and to some extent with friends because they can help you. And always have this financial discussion line, right? See, finance need not be a very individual personal thing, right? I discuss very openly with so many of my friends, like, hey, what's a good investment? Hey, what are this area, is this a good area to invest? Is this a good stock to invest? Right, there are multiple discussions. So please build a friend circle. What I mean here, friends and this is build a friend circle where you can share your thoughts very openly and discuss it. That's the intent. Obviously, income minus your expenses is the savings, and this savings is what go into your investments, and this investment is what will generate you the passive income. Okay, any questions till now?
It's going
No.
good, and
Very
thank you. You are a
Yes.
very good teacher.
Thank you, sir. Okay, now comes the real part of it, right? So in investment, I call this the basics in investment. There's a very fundamental term called CAGR. Okay, those who are from the finance field, they know cumulative annual growth rate. Okay, this is I will explain this. The second, there's a magic number called 72. Okay, using this number mentally you can calculate what is my growth, right? So as I told you, right, before you come to the investment part, please ensure all your basics are taken care, right? You have some money for as a emergency fund in your fixed deposit, you have your PPF or EPF, you have some money for your education, blah blah blah. Once you have done all that, then whatever money is left is what is your savings, you do it investment. Now when you're doing investment, the first thing you should look at is what is the growth rate. Okay, just because some friend told do this or do that, whatever, some you get a phone call from one bank lady or some investment person, you just don't blindly put the money. You first look at what is the growth rate. Okay, now I will show you one tool how to calculate that. There's a tool, CAGR tool online. I will show you in the next 2 minutes. Then this magic number 72. This is again a financial number. So what it means is I will start from below. See, what is the first fundamental basic investment that you can do is, if you have some money, if you don't know anything about investment, go and put it in a FD. Correct? How much will a FD bank FD will give you? It will give you 7%. correct? So now the fundamental concept of investment, if you want to calculate, you should say, when will my money double? Okay, always when you are thinking about investment, you should say, when will my money double? If you put in an FD, and if that FD gives you 7% return, you will need, so you multiply by the number of years, it will give you around 70. So this is the magic number. So in 10 years, it will double. Means mentally, this is just purely for your mental. Of course, you can use calculator and do all those things, but this is a mental magic number. Now, let us say you put in PPF. Okay, it gives you around 8.25 or something like that. So if you are putting your money in PPF or EPF, it takes 9 years to double. Okay. Now, if there is an option where you invest, I can share you some details later, is around 10%, which means that your money doubles in 7 years. If you get 12% or you get 15%, 15% is very good because your money can double in 5 years. So, which means, let's say you put, since you all understand real estate, let's say you are going to buy a plot in Airport Road. I'm talking of Bangalore. I don't know if the audience is outside of Bangalore. Let's say you are going and buying a 30-40 site in Airport Road. The first thing you should look at it is, if I am putting 25 lakhs there to buy the site, when will that become 50 lakhs? Will it happen in 5 years? It will happen in 7 years, or will it happen in 10 years? If it happens in 5 years, well and good, you are getting 15% return, great. If you feel that my investment will probably double in 10 years if I put a site there and it will take its own time to grow, then rather put it in an FD. Why do you want to go and put somewhere in some plot, somewhere 30-40 kilometers away, and then wait for 10 years? Rather, with peace of mind, you can put in FD and wait for 10 years, your money will double. So this is the mathematical calculation that you want to take. Okay, I'll just quickly show one tool, right? So CAGR, how do you calculate CAGR? Are you still able to see my screen?
Yes, sir. Please.
Okay, so there are many tools. I just searched in the Google and it CAGR, CAGR tool. You can do it as I am speaking. So how do you know what is the return? Always you should look at what is the CAGR return. CAGR is every year, how much it returns over a year. So let us say, I'm just taking this example, right? For those who are attending here from Central Excise Layout. In 2004, the cost of the plot here in Central Excise Layout was 1,000 rupees. Do you all agree, those who are in Central Excise Layout? Around 2004, the cost of per square feet was 1,000 rupees per square feet. Okay,
You
so
are right. You are right.
yes. Today, what is the cost, sir, in Central Excise Layout? What is the per square feet cost approximately?
It must be around 8,000.
No, it is 20,000 per
Oh,
square
yeah.
feet.
Which central exchange layout?
Yeah, in Bhupsandra, Sanjay Nagar.
Okay, okay. There is.
Yeah, so in 2004, it was 1,000. In 2024, I'm just taking 24. Now, how much years has passed? It is 20 years, right? I'm just taking 20 as an example. So we may think this is very huge, right? 1,000 rupees became 20,000 rupees. So 30-40 site, if you had invested 12 lakhs, today it is 2.4 crores. Okay, a 30-40 site in our layout, in Central Excise Layout, is 2.4 crores. Whereas a person who had invested, taken the plot just 20 years back by paying 12 lakhs, just 12 lakhs has become 2.4 crores. Okay, which is very good. There is absolutely no question on that. But then how do you know what is the percentage? Okay, don't look at the final value or the number. You look at the percentage, and that percentage number is called CAGR. Year on year, okay, year on year, it has given you a return of 16.16%.
Oh, that's great.
Okay, which is a very decent return for a real estate. Okay, this is how you need to calculate. Now, this is, I'm telling the past, right? Oh, we took it at 1,000, now it became 20,000, so it has taken. But then this talk is about future. Of course, you need to do this calculation for your respective sites. Okay, I'll show you one more number, right? So I had taken a plot for 5 lakhs in Airport Road. Okay, I'm just giving personal examples. And I sold it about 6 months back for 32 lakhs. Okay. and it has taken 20 years. Okay, I really bought it in 2004 only, 2005, and then I sold it 6 months back. So in 20 years, I invested 5 lakhs for a plot in Airport Road. I sold it for 32 lakhs, and I was invested in that plot for 20 years. What is the return? 9.73%. Okay, so like this, you need to know what are your investments, how long it has been there, and then what is the CAGR. Okay, so with all the struggle, with all the this one, if all that I could have done is put it in a PPF account or put it in a FD account, I would have get 7 to 8% easily. So again, all real estate may not be good investments, but just figure it out. So I would let you. So now going forward, how do you invest? You should do this calculation. So let's say you are taking a plot in Airport Road. I'm just taking again Airport Road. So let us say you are going to invest 25 lakhs, and this is an assumption. See, all investments are purely based on your own assumptions. Okay. So let us say you invest 25 lakhs in Airport Road on a plot, and you feel that there is a good potential. It will grow to 50 lakhs in how many years? In 10 years? Then your return is 7.18%. Then you'll have to think, do I really need to buy a plot, or can I simply go and put this 25 lakhs in my FD and still get 7% without any headache? Or if you feel, oh no, this has very great potential, maybe it will double in 7 years, then your return becomes 10%. Okay, so this is investment is all about a guesstimate. You as an individual, when you are investing somewhere, you need to guesstimate as to what will be the growth opportunity in that segment or in that area. Okay, so I'll stop here, just to show you how you need to calculate for future investments, how you need to calculate for your back investments, already what investments you have done. The reason I sold that site, which I told you, was around 9%, right? I did the quick calculation in front of you. It gave me 9% return in 20 years. Maybe I know how to generate more than 9%, so I sold it and I have reinvested that money somewhere else. Okay, so that is the logic that you will have to use. Unless you are sure that you are able to make more money than that. If something is generating you 9%, and if you feel that that is good enough, absolutely don't do anything. If you feel that I am making 9% here, but maybe I can make 12% or 14% somewhere else, then it's a good time to exit. You have still made money. It is not that you are exiting under loss. You still make money, but then you use that money to invest somewhere else. So that is how investment works. Okay, I will come back to the slideshow. Any questions here?
There is a question, but it is not a question. My good friend, Mr. Sambhashane, is writing. As our president was telling, we should have heard this lecture long back, 15 years ago. But we can't do. We can't go back to this.
Yes, sir.
Every second, one moment lost is lost. Opportunity lost. Let us not have to worry. If
Absolutely.
any book or literature or from your thoughts, please inform his telling. I think our speaker will give hints of some good books where people can get it.
Definitely, sir.
Yeah,
Definitely.
that's all. Can
Okay,
continue.
so again, the punchline, always look at my punchline. When will my money double? Okay, all your investment. See, there are two things which I tell, don't worry about the money. One is your own house. Okay, because you are going to live there, make it a luxurious house, no questions asked. Please lead a very luxurious life. Okay, you all make money to lead a good life. Please do not cringe on the house that you are staying. The second house or the second site or the third house or the third plot, always look, it is an investment. Okay, only the house that you are staying, don't consider it as an investment. It is you are living there, be happy in that house. That's the thing. Then comes the car, right? So just whatever good car you want to drive or whatever, do that. But anything beyond that, you always consider all those things as investment. The first thing you should ask is, how much money will I make? Okay. Okay. Coming to real estate, right? So in real estate, there are multiple ways to invest. One is you can buy a site or a plot. You can take a plot and then build a house, or you can buy a flat in an apartment complex. Then there are commercial investments you can do in commercial buildings where you get rentals. Then you can invest in agricultural land. So there are multiple things based on your strength and based on where you feel comfortable. Always do investment where you are comfortable. Okay, that's the most fun way, because if you do go somewhere and do invest something and you don't know about that particular product, you are like, literally people will cheat you. Okay. If you don't know anything, take your money, put it in an FD, be happy. Okay, done. You will still get 7%. Any investment beyond 7% is what you need to break your head. If you feel that you are not able to make money beyond 7%, please don't break your head. There are so many risks involved and all those things. So that's the first financial advice. If you don't know about an investment, if you don't know about that product that somebody is trying to sell you, don't even break your head. Just say, sorry, I don't want to invest. Take your money, put in an FD and be happy. Done deal. Right? So I think those who have invested in real estate, most of you have done this. So you know, site or plot is low tax rate. You can avail loan if it is a good, what to say, approved site. Always do in a growth zone. What is growth zone? Right? See, people simply go and invest somewhere. Okay, what is your criteria to invest in a plot or a site? The most fundamental criteria should be there should be employment in that area. Okay, I'll repeat. The meaning of growth zone is there should be employment in that area. What is employment? Let's take Whitefield area. Okay, Whitefield area has lot of what to say IT companies. Okay, so you have to identify those kind of zones. Okay, identify zone which is growing. Okay, so I will not tell what are the new zones that are coming up. You, based on your research, please do your research. So growth zone is an important thing for investment. Whenever there is employment, people will come from all over India. People will come, want a rental house, they want to build their own house, whatever, the property value will go up. Okay, so this is the important factor in this. When you are buying a plot or this one, look either there is a growth zone, there is industries, there is factories, there is some companies coming up, whatever, and that should be your investment idea. House or flat, you know, you have to pay tax, you have to do maintenance, painting, this, that. So there's money that goes into all those things. And then selling also a little bit slow. Commercial, again, the tax will be higher, loan will be good, but rent will also be good. And you can sell a commercial property quickly. Agriculture land, there is no tax, but there will be no loan. This is the most important thing. You can take a loan for all these things, but in agriculture land, nobody will give you loan to buy. It has to be your own money. And then overheads are high, maintenance, like if you buy a land 50 kilometers, 100 kilometers away, who is going to take care of it? All those things. So it's a good investment. I'm not telling it's not, but then please be aware of these things before you invest. Okay, that's what I would say. Again, when you sell, again, see, you make money when you sell. Okay, otherwise it's just sitting on paper. So when you sell, there's a capital gains of 20% or 12.5%, depending on this is, I'm talking of real estate based on the tax thing that you choose, right? So there's indexation and various other things. SEA can help you. But in the broad level, the returns will be 5 to 15% in any of these kind of things. Okay, it can go negative. Usually in real estate, it doesn't go negative, but the growth may be a little slow. The only problem in real estate is the land mafia. There could be some problems, legal problems, so many things that may come. So you'll have to be careful. Any questions or thoughts here? Okay. So coming to stock market, mutual fund. So nowadays, a lot of people have started investing in stock and mutual fund. So stock is one category, mutual fund is one category. I'll just, for those who don't know, stocks are individual stock like companies, right? Like large cap, right? You have HDFC Bank, you have Reliance, you have SBI Bank, right? The Tata Group. These are all large companies. So that's why you see the picture here. Large means they have already grown. They have been in the industry for a long time, 20 years, 25 years. They have become very big, 1,000 crore plus revenue. That's what we call large cap. Then mid cap is 500 crores to 1,000 crores. And anything less than between 100 to 500 crores is called small cap. Okay. So obviously large caps, if you invest, let's say in Tata Motors or you invest in HDFC Bank, you still get a good return. If you invest in a mid cap, because of the risk involved, you will probably get a slightly higher return. Okay, but risk is there. Then small cap will be again much higher, but then the risk will be there. Now, these are individual stocks. So if you know how to research a stock, if you feel a stock is going up, if you feel whatever, right, you can do your own research. See, always you need, when you have money, you need to know, have some knowledge. Okay, money without knowledge, money will vanish. Okay, so when you are trying to make more money, you should have knowledge. So I would suggest, if you really want to come into this field of stock and mutual fund, please do study. There are good newspapers that come, Economic Times and those kind of things. Please read that. There are good books, understand it. There is a good return. I'll show you the returns here in next 2 minutes. What are the returns from these things? Now, if you don't want to do all of those things, you don't know how to read a stock market, or you don't know how to read individual stocks, what is their profit, what is their so many percentages are there, then good option is mutual fund. Okay, there is a fund manager. You just put your money on a monthly basis. If you have heard of SIP, systemic investment plan, you just put your money in the funds. Within that fund, there are again 3 categories. You can only invest in large cap. If you say I don't want to take big risks, so this fund manager will invest only in big companies like Reliance, Tata, HDFC, SBI, and those kind of things. If you feel that I can take little more risk, there will be a fund manager who will invest your money in mid cap, and the funds which can invest in small cap. Okay. Now, again, the risk here is it can go negative or it can go 20 plus. Okay, now I'll go back to this one, index one. This is a website. It is there in that chart that I showed you. The link is there. I will show you the kind of return. Okay. Now there is something called index fund. You don't have to worry at all. There's a Nifty 50, the top 50 companies, right? Like Reliance, HDFC, SBI, blah, blah, blah. So there's a fund manager who will invest it. All that you need to do is either, if you want to do lump sum, 1 lakh, 2 lakhs, whatever, or if you want to do SIP, even 1,000 rupees, 5,000 rupees, you can do it. Don't be surprised. I will show you the returns. Okay. You will be astonished. Okay. An index fund, the large cap index fund, has given a return 5 years, right? If you see here, 5 years, 19%, 19%, 19%. Okay. All of them have given 19%. Blindly, you could have put your money. 5 years back, if you had put your money, this could have probably grown beyond 100%. I showed you the calculation of the central excise layout site value. 1,000 rupees to 20,000 rupees, that is from 12 lakhs rupees investment, became 2.4 crores. What was the rate of return? The rate of return?
16%.
16%, right? 1,000 rupees per square feet became 20,000 per square feet in 20 years. Okay. 16%. Good, sir. Okay. Now imagine if the same money was put in Nifty 50. It is given 19%.
Yeah.
What do you think? Site investment would have been better, or just a simple 50 index fund?
That's what Nifty, sticky, Nifty 50.
Right? Your
Yeah.
2.4 12 crores, 12 lakhs instead of 2.4 crores would have become like 3 crores or 3.5 crores. Okay. So this is, again, close your eyes. I am still showing you much better returns. This is, I said, index fund large cap, correct? Then comes mid cap. Okay, I showed you mid cap. Okay, here is the surprise. There's a Motilal mid cap investment fund in 5 years. What is the percentage here?
Not able to see. 70.
30%.
Oh my God.
Okay, 30%. Okay, dear friends, this is what a simple mutual fund investment in mid cap has given you. Okay, a property investment, which we all think is the greatest investment, gave you 16%. A large cap mutual fund investment gave you 20%. A mid cap investment is giving you 30%. Again, this is not, I am not creating these numbers. These are all like researched. These are all websites from standard, this one, right? So I'm not, there are many other funds. So this is not what I am creating here. And then there is the small cap. Okay. So small cap has given again around 30 to 32%. Okay. So these are all the options. So the reason I'm showing to you here is, See, in my slide, I just showed it as what to say, 15, 10. To be on the conservative side, I just showed 10%, but actually this was 19%. Mid cap was the 30%. I am just showing 15-20%, and small cap was also 30%. I'm sure. So ideally, you can expect around this range, but you have to be invested. Okay, 5 years to 10 years. Okay, that's a very, so you cannot say I put it today, then suddenly there is a war somewhere, and then the stock market goes down, and then oh, my value went down by 10%. If you are in that zone, don't invest. If you feel that I am ready to wait for 5 years, like how you put it in a site, right? Once you put it in a site, you don't worry about it for 5 years, 10 years. Similarly, you can put very safely in a mutual fund. Your money will grow automatically, but don't look at it on a daily basis, because there is COVID, suddenly the stock market goes down. If there is war, the stock market will, but then it will pick up again. So this is the logic of a stock market or a mutual fund investment. Any questions before I move? I have just 5 more minutes. I have only one slide or 2 slides. I will stop. I'll close after this.
Yeah, sir, that's a very good eye opener. This goes to show that it is better to put it in different bags. One medium one small one safe one risk, like that. You can divide your
Exactly.
investments. Not, I don't say that don't invest in side, but that is the side is a long term, as you say. But if you have some extra funds which you can spare, I think it is. So you can divide that into 2, 3 different. Yeah, you can throw some more light on that, so that.
Definitely. So there are different. That's where some studying has to be done. But if you see the advertisements, right? Mutual fund sahi hai. In cricket match, this one you see a lot of. Why is the government of India proposing that mutual fund sahi hai advertisement? It is because of this, right? See, people are stuck with only gold and real estate, but
And
this simple mutual fund which you can see, stock is risky unless you know about it. I would suggest not to do anything with individual stocks, but mutual funds are pretty safe as long as you invest in good ones. Okay. So what are the advantages, right? So while I showed in real estate that you have to pay tax, this, that, and all those things, tenants, land mafia, all those things. But in stock market, it is, you have to study the market. That's a fundamental basic. You have to learn the investment basics, start slowly. Okay. Then you need to, like how you open a bank account, you need to open a demat account. All your stocks and mutual fund will be in this demat account. It's very clean and safe. The most clean and safe, there is SEBI, there is so many governmental organizations which are overseeing all these things, like how RBI oversees the banks. There is SEBI which oversees all these investments. Then immediate disbursement, very high liquidity. Tomorrow I don't want this, I'll sell it and I'll move on. Okay, done deal. I don't have to worry about it. The tax also, as you can see, is for short term. Like if you sell it within 1 year, it is 20%. Whereas if you keep it for more than 1 year, 12.5%. You make uh, good tax saving here because you are like very low tax rate is there. Otherwise, if you look our salary, our this one, if you are depending on the bracket, you pay 10%, 20%, 30%. In FD, you have to, it is fully taxable based on your this one. So, but here, how much you can sell 1 crore, you can make 1 crore profit, but still you will make 12.5% as your tax. If you make 1 crore as your interest profit, you have to pay 30 lakhs as your 30% as your return. So that's what it is. Okay, so coming to my last slide, which is asset allocation. As Sir just now told, you see, there are many options in life, right? So we should not put everything in one basket. So as I told you, you need to have emergency fund. You please keep for plan for 2 to 3 years of expenses. It could be a house renovation, house construction, children's fees, or for marriage or whatever, right? Then your own house. Then comes gold, which is probably the safest. I would recommend 5% of your assets should be in gold, 5% or lesser. It could be in physical or in exchange traded funds. So once you open a demat account, all gold that you buy can be in the paper format. Okay, you don't have to own physical gold. Yeah, so it is called ETF, gold ETF, exchange traded fund. So it's a very safe option. Then there you have, of course, you have the next most simplest and the safest is your FD, your PPF, EPF, and some debt funds are there. Then comes your stock market and real estate. Okay, and so as Sir told earlier, it is good to split all your asset into these things and then see where how much is your percentage. Sometimes if you are not invested, then your whole asset maybe 80-90% could be in real estate and maybe 10% could be in FD, which means you are heavily relying on real estate. You may want to slightly put some things in mutual fund. So that's the little bit of what to say. You need to do your calculation. You need to know where all you are invested, and then see where the growth is there, what is happening, and all those things, and then take your decision. Again, do not fall prey to somebody will call you on phone, somebody will do something. Do your own research. That's all that I would say. So this is my last slide, sir. So open for any questions.
So anybody who's in the meeting can directly talk to Ashok sir.
To be honest, it is a very good eye opener because most of the time we don't apply our mind and see what are all the options available. You have done a great job, Mr. Ashok, and thank you. And probably if when we start implementing whatever you have told us, we'll trouble you and we'll call you.
No problem, sir. So anytime you can just. It's all
I
about.
agree with our president. See, hitherto we were not looking into the wisdom of how to invest. What should be the idea? Your CAGR has been a very good tool for us to judge ourselves where we have to invest. Wonderful, wonderful it is. Anybody else, please ask questions and we will try to get more.
Sir, especially,
Input from-
excuse me, sir, that was a good talk. In fact, last year and year before, for retiring officers, our nation has always conducted one 3 days or 4 days preparation for retirement program, which has got a lot of eminent people and experienced people in various domains, starting from health, because once you're not in job, the immediate psychological effect on the men folk, because all along for 36 years we have a routine of going to office at 10 o'clock and working there and slogging and coming back, and suddenly you find that your routine is not there. So the psychological thing, secondly the health, because when you're working 1 or 2 days, you take some crocin tablet and move on, and your body also helps you. Second and third thing is most important thing: how to invest your the corpus, that is the hard-earned money of 3.5 decades corpus, because if you are going to get such a corpus which is fully legal and hard-earned money, each and every naya paisa, in a very methodical manner and safe manner. This topic, I think, one of the this one session can be. It's my request. We can suggest his name. So that he can take about 1.5 hours or 2 hours session to the, especially the retaining officers. Of course, nowadays youngsters are, I have find a lot of youngsters who worked under me also, they are much smarter than our generation, because we were more in a traditional way of thinking. So for especially for the people who are retiring or about to retire or already retired, he can take a handle session and he can give good advice, because risk, he has to come. We have to combine risk and safe for the purpose of investment. That was very good, sir. So
I agree with you, Vasu. It is we have been we have
exactly.
been giving.
Thank you, sir. I should thank you, because you were there in 2023 May month. 4 days you were there, and you were busy with Palasamudra. But on the last day, you made it a point to be with us for a couple of hours. So that was actually a very good thing for especially retiring officers, because we may not find time during our service time. So retiring time, we can plan our retired life more in a more methodical way. I think his topic can definitely find
No,
a place.
I fully agree with you. He's a very good presenter, lecturer, and I am really impressed with Ashok's way of presentation. In fact, we have started incorporating this financial planning even at the induction course
Exactly, sir.
because of your NPS and OPS. They
Yes, yes.
need to start thinking in terms of
At early
investment,
age.
and I will recommend his name certainly.
Yes, sir.
Thank you, sir.
Thank you.
Anybody else can also interact with Ashok sir on anything, which any tips, and we will share his number, mail and number also. When you're at leisure, you can mail, and when you free time.
Sir, I see a question. Sadashivan sir has asked investment in gold question mark. I think
Yes.
I just briefly touched upon it. So
Yes.
gold is also a good investment, but it is only a risk balancing investment. Okay.
Yes.
So over the years, in the last few years, it has grown. If you really take a 10-year, 20-year thing, again, CAGR, right? If you just take, oh, it was 10 grams was like 1,000 rupees. Now 10 grams has become this much. Then the number may be look good, but the CAGR is what you need to look. But it is a good investment to have around 5% in your entire portfolio. That's it.
5%. Okay, sir.
Approximately. Okay. Anything else, sir?
There is one more question, sir. Can you take it up? Mr.
Which one?
Gurudatta Ganjana.
Gajanan.
Gajan.
Eyesight is becoming poor.
Hello, sir. I am Gurudatta. I am, my brother is Rajiv, your classmate.
Oh, okay, Gurudev. Yes, sir. Tell me.
I just want to add, while the year earning period, one need to think of protecting that earning period with insurance. Life insurance is one of the ways, and then health. Health problems can happen to anybody. And
So maybe I can take 2 minutes. I did not want to specifically touch on the topic because I thought you're. So what is insurance? Okay, insurance. You need a life insurance to protect. Again, just sorry if I tell this. Life insurance is not an investment. Okay,
yeah, it's
life
not
insurance is
investment.
like
Yes.
your car insurance. Okay, you buy a car and then see if there is an accident you get paid for it. So there is something called term insurance, which is the most important thing, which all of us should have, which no insurance agent will tell you, because whatever, I will not go into the details. So all of us need a term insurance, which means if something happens to me, my family will get the money. If let's say I've taken a loan of 50 lakhs and constructed a house, I need to insure that, because if something happens to me, that 50 lakhs should not be a burden to my family. So I take insurance for that, this one. Then whatever, right? So you need to have insurance based on your expenses of your house and other things. So that is called life insurance. Why every individual should need to have life insurance. Beyond that, it's called term insurance. Be very specific with that. Ask your agent, I need term insurance. Okay. The second thing is health insurance. Absolutely critical in the current situation. Easily, please take an insurance for at least about 10 to 20 lakhs. Okay, for your family, which is that's the whatever, as it grows it keeps growing, but then please of course the central government employees have your CGHS and other things, but those who don't have, please take health insurance. So thanks, Gurudatta sir. Term insurance for life, health insurance for the family. So these are the two fundamental insurances that you need to have in your portfolio.
Thank you.
Sir, I want to ask a question.
Yeah, please.
There are some schemes like Sukanya Samriddhi Yojana.
Yes.
The scheme is that for 14 years, the subscriber has to pay amounts, and there is a 7-year lock-in period, and at the end of 21st year, there is a lump sum given. So, in such cases, is there any formula or any website where we can know the CAGR?
Yeah, you can see, usually the same thing, they would have given you the details. I'll tell you, it's around 8.5 to 9. That's what the overall calculation comes to. It's a very good investment where for your girl child. So that's why I told, right? What you start from the basic one, right? So what is basic? Basic is FD 7%. Please put some money there. Then I put the second category as PPF or as Sukanya Samruddhi, if you want. I just put it 2-3 things, but then please, those are all government bonds, government related investment, extremely safe. Okay, and again, it's a small investment. In the long run, it's a very small investment. So please build up your portfolio. 7% investment, 8% investment, then look at 9 or 10% investment. See, whatever I showed good things about real estate and the stock market, they are very risky. Okay, so build your portfolio. When you feel all of those things you have taken care, then slowly get into the upper thing. So first thing is your emergency fund. Please keep some X amount depending on your lifestyle. As an emergency fund, it should be available tomorrow. If I need it in next 5 minutes, I need this money. Okay, keep that much money. Then FD, then your PPF, Sukanya Samruddhi, your whatever other post office investments. Very good. So invest all that, then slowly see, again, that's where you build your portfolio. You should say, I will invest 5% here, 10% here, 20. See, let's say you have 1 lakh amount, right? In a month you say 1 lakh. Vinay sir, if you say 1 lakh, you should say, I will put maybe 10,000 in an FD. I will put another 10,000 in my PPF account. I will put another 20,000 in my stock market. Like that, you have to scale it in. You need to know based on your investment savings. You should plan accordingly. But it's to your point. Yes, it's a good investment. Please do that investment. It's a very safe investment. Yeah.
Yes, thank you, sir. Actually, in fact, I wanted to just add on. I had seen one advertisement where the subscriber has to pay, say, some amount, say 1 lakh, etc., for 8 years. And then there is a lock-in period of 8 years. So at the end of 16 years, something is coming. So I was just wondering, people who are in young age and middle ages, and having younger children, for education, etc., liquid money is also important. So I thought some such, maybe in your presentation, sir, in future, address to not just from seniors point, elders point of view, but from middle-aged officers who are early into the career also. If you may add some suggestions or experiences,
Yes.
it will help us, sir.
No,
I
good.
agree with you. We will have one more talk in the next month or couple of months away, because he's our own man. I can request him. We will have it, sir. Very fair. Thank you for your suggestion.
Yeah. Thank you, sir. I mean, it's a great literacy, sir. On this Guru Purnima day, thank you, Guruji. Thank you.
No. There are many senior people here, so good. So again, the last point I would say is please read. All these things comes through reading. Okay, so see, we all have same intelligence, we all have same knowledge, but the only way is you read these financial books, you read so it's all about reading and learning. So read newspapers, financial things, or any books that you have. So that's all I would say. So that's where you learn a lot. Yeah. Okay. Anything else, sir? Vasudev sir, or
Yes.
Sir, good evening. Shall I ask a question?
Please go ahead, sir. Hegde, sir.
Sir, I have heard something about SWP for the senior people who can invest lump sum first and then draw. Please throw some light on that.
Yes, great. So good point. So this is a SWTP systemic withdrawal plan, right? So in the mutual fund, this is all related to mutual fund. Let us say you have invested, let's say you retire and then you have some 50 lakhs which you have in your hand. I'm just throwing a number here. You can say I will invest some 20 lakhs in large cap, maybe another 20 lakhs in mid cap, maybe 10 lakhs. So this is your 50 lakhs I want to. You might have got a few crores, but maybe 50 lakhs you allocate to this one. Now, for your expenses, right? So now you have retired. Of course, you have pension, or if if not a government employee, then there's no pension. How do I run my house? I need 1 lakh. Okay, I need 1 lakh for my house expenses. So your corpus will continue to remain there. Let's say it has grown by a few thousands or a few lakhs. You can withdraw every month. You can put in a request, like how you put in a request in your bank, right? I need something. You can put in automatically from this mutual fund corpus. You will get 10,000, 20,000, or 1 lakh, whatever you want for your house expenses. You can withdraw. That is called systemic withdrawal plan. Like how you can put systemic investment plan. In your younger days, you will start a systemic investment plan, 1,000 rupees per month, 5,000 rupees, 10,000 rupees. You keep on investing. It grows into a big corpus. Then when you really need it, you stop working or you need it on a every month basis to run your family. You can say, I need 10,000 per month, 50,000 per month, 1 lakh per month. You can, that is SWP. That's the.
Yeah, thank you very much.
Okay.
Also, shall we
Yes,
conclude?
sir.
I am privileged to talk on Ashok Karani, sir. When Brahmanandam suggested, I was really thrilled. I was really fascinated. Immediately, I spoke to him. He was so friendly and so honorable. And the way he expressed today, best of the teachers will be ashamed, because finances we knew nothing. But he's made us understand, go through the journey, and how we should be wise. Of course, when greed overtakes the need, troubles breed. But before this, what is the minimum situation we should take care? And step by step, how we should increase. And when we can take more risk without troubling the basics, fundamentals. Yes, beautifully analyzed. As my friends were telling, we will have another open talk with him, probably in the August or September, as time permits, because we have another speakers who have lined up, beautiful speakers. So I thank on behalf of Sambhashane, our Samprabha. A great thanks to you, sir. And we were lover of your father's investigation skills. Now your investment skills have come to my rescue. Before saying thanks to all, I would like to announce one more program. It's another one great program we are having. One Mr. K. Radhakrishna, professor, retired professor, a great writer. He is a stalwart in education. He is a stalwart in culture, public life. He has written hundreds of books. He has visited all over the world. He is going to speak on a very important topic, Ramayana and jurisprudence. Ramayana ಮತ್ತು ನ್ಯಾಯ ಸಂಹಿತೆ. We are talking about modern jurisprudence, this modern Western jurisprudence, how it is already taken shape during our Ramayana. That's what he may highlight. That's what I speculate. He is my favorite speaker, and we are having it as recommended by our friend, Mr. K.G. Lakshminarayan. With him in his company, I have met him. Please join, ask your friends to know about the essence of knowing Indian culture and its value, which is valid forever. Chirantana ಮೌಲ್ಯಗಳು ಇವೆಲ್ಲ ನಮ್ಮ ಭಾರತೀಯ ಸಂಸ್ಕೃತಿಯ ಮೌಲ್ಯಗಳು. So let us focus on that. With this, I thank Karani ji once again, our president, Mr. Vasu. Today, I would have been absent because I had some domestic work. He has taken the full of action. He has made it very wonderfully. And I thank all my listeners. Only one request is make this as a popular one so that we will have this journey, navigate this journey of life with a lot of wisdom, happiness, humor, everything. As 1 hour per week, we will invest, and as friends, we will join here. Thank you. May God bless every one of you. Sarve Janaha Sukhino Bhavantu.
Thank you, sir. Thanks for the opportunity.
Thank you. Thanks.